Hey, good morning, everyone. How's everybody this morning? Hey, Raj. Kevin, what's up? Okay, guess we should get to work. I'm good. That weekend went quick. Just kind of blinked and it was gone. Hope everybody had a good weekend. Went pretty quick. A little too quick for my liking. Okay. Welcome, folks on YouTube. Hey, Julian. Ah, California. Nice. Southern or northern? I miss California. Okay, let's get right into it. Hey, Sam. How are you? We got people from everywhere. Australia, California, Patty. Thanks for being with me. So, we had a little news after the close on Friday about a debt downgrade or a investment downgrade, and that caused a bit of liquidation. The funny thing is, though, when we did liquidate on Friday, you'll see that, quite a bit of liquidation down, but then you'll notice that the market closed up from the low of that liquidation. That's that's something that people want to pay attention to. When you look at a liquidation, look at the nature of the liquidation and look for continuation lower. Because if a market stops liquidating and then lifts going into the close, that means that there was short covering and there wasn't enough product down here under 59.40. So the market moved up and closed in that 59.50 level. Now, when it opened, of course, we had liquidation because people had time to sell, right? So we have a liquidation. Overnight inventory is about 100% short because all of the trading in the overnight is underneath the close of the previous session, okay? And that is why we had that little move up just now and we stopped at the previous day low. We found some buying in these single prints from the 15th. And we have a poor low here, which is a double bottom, all right? And that poor low means that there are buy orders sitting here and they're competing. And as soon as we got into the single prints, the buying came in and shifted price back up. So those are things to look at. London's going to open in half an hour, and let's see if we continue. And if we do continue, we'll fill these single prints and then get into the second distribution of the 15th. Another thing that market profile is really quick. You can see really quickly that we came right into the position before the move higher. So this is a really simple thing. Check this out. If you go and look at This is the position before the move. This is the selling of that position for profit. And then when you liquidate right back into this cost basis. And market profile is a very quick way of seeing that. So now why is that important and how does it help us as a retail trader? Well, it helps us from shorting down here, right? If the market can't break 5,900 in the overnight and going into RTH, you'll get rotation back up. Now everybody's worried about news and debt downgrades and all these sorts of things, but you have to understand that this market is structured in a way that right now, if you look at the bigger picture, we'll just go into this because we're starting the week. Bigger picture, we still have a very large short position underneath 58.50, or sorry, 58.90, I'd say, right? That's where the market has been bid for the last 4 or 5 sessions, ever since this move higher. And we have a massive gap here to the upside, which is a short position. So we're going to need more sideways action to build up more inventory before we get a move down, right? Right now, we're not getting it. Let's watch the overnight and see if we can get lower. And now we're into those single prints. We had a nice move up, and I did a little test short. Here we go. We get some nice liquidation now. So my balance zone is 11 and a quarter to 15. Double it up to 22. I did a nice look above and fail of 22 half. I was short 22, covered 18, 19. And had I had more contracts, I would have stayed short till 15. So we're just doubling. And if you wonder why I do this, take a look at this. If you draw the volume profile from the move, you'll see the bulk of the volume is between 11 and 15. Okay? It's all about cost basis, ladies and gentlemen. Remember, it's a market, right? And in a market, you have goods. Those goods are priced at a certain point, and then they're sold at a certain point, right? It's very simple commerce. The chart is just a sales chart. And it tells you where there's potential buying and where there's potential selling. Hey, Zeth, how you doing? Southern California. Nice, Julian, nice. Yeah, it's still Sunday night on the coast. I'm in the UK, so it's 7:30 in the morning here. And you see we're in this green box. That's that green box from the 15th that separated 2 distributions. And notice how it's kind of choppy here? So I don't use the profile to trade off of. I use it to give me some sort of, it's like a map. It's like a map of a larger, like the larger part of the city. And then the 1-minute chart is the map of the neighborhood I'm in right now so I don't get lost. So right now, let's watch that overnight low and see if it holds. Usually at nighttime, there's not as much buying. And nighttime is a great time for people who are trapped short over the last couple of days at higher levels. It's a great opportunity for them to get some cheap product. Hey, Doc. Good to see you. How was work? I'm looking for a little lower, right? I'm a little short biased. I have to say it out loud. That's good. I'm waiting for the reaction at this overnight low. So one last set of stops. And if it stays under 10, if we can get under 10, break that overnight low, I'd be looking for lower down to 7 and then 3. Pretty slow right now, right? Price action's a little slow. These slow ranges are nice if you can trade over a longer period of time. You know, if you're taking trades and you're holding them a little longer, the slower price action helps with that. Then you get through that chop. Because when it's like this, it's kind of hard to scalp. You know, when you have candles like that, it's a little harder to scalp. So yeah, it's kind of moving like it had a few too many. It had a bit of a too good of a time on the weekend. So I would not initiate a trade right here. That is a poor low, and that is a place where I'll let the large traders work this area out before I transact. Right? If you're short and the market stays offered under 12, you can stay short. In fact, let's go help you out here, and let's go mark where the sellers will be. So you can clearly see that there are sellers here. If you make this a bit bigger, it's amazing how much a simple 1-minute chart will tell you. And then the sellers move down to here. And now you want those sellers to stay underneath that 11 and a half. So if you're short, you see, nice, see it breaks. So if you're short, you can stay short. And now we'll look for 7 and a half because we know the levels are working fairly well. They're off by a tick or two. And what usually happens on nights like this is the market will liquidate, and then somebody or a group of people, right, will buy up all that cheap inventory. That's why sometimes you'll see the overnight sell off and then move higher into RTH because all that cheap inventory has been acquired. And this is a way, see, this is a way you can stay short. It's hard to hold trades longer. In a market that's slow like this can really help you, right? Because what you do is you see that offer moving lower and lower and lower, right? And that means sellers are competing, and that's exactly what you want when you're a short seller, right? You want that offer to keep moving lower and lower. That means those sellers are pushing price down. They're price competing, right? And that's what you want when you're a short, right? And if you're thinking about going long, this is not for you to go long. Wait till the selling stops, right? Wait till the selling stops. Now, watch the high of this candle that's developing right now. It should not get over the high of that 59.09 top. If it does, that means we've temporarily run out of supply. But they should sell into it right there. See? Right there. See how they're selling into it? Do you see how the offer came down when it got there? When you rewind this, you'll be able to see it very clearly. Right? Now, if they see buyers, they will raise price like that. And the next place that you would look for a seller is there. This can help you when a market comes down under a level and goes back up and you want to cover some. Say you were short 10 contracts here, right? Say you're short 10 contracts on the way down. You can cover some here and you can cover some here before it goes back up and takes your stop. That's how you can trade and maximize your profits without giving things back. Especially in a slow market like this, you can see the offer being moved lower and lower. Now let's see, we found sellers here. Let's see if we can stay under 9. Right? It's a very simple way of looking at markets so you don't have to guess. You don't have to rely on an indicator. Right? You can just rely on common sense and the actual business. Hey, John, how are you? Settling into retirement? Now watch the top of this candle. Feels strange? Well, you're in the perfect place for retirement. See how it's kind of going back and forth in this area, but it's not taking out these lows? But there's a seller here. So that's a small negotiation right here. And let's see how that results. If that results in lower price or higher price. You see, we filled the single prints, put in a new low, but overnight inventory is still 100% short. So when London opens, let's see if London sells off. That's in 10, 11 minutes. You just run out of supply at the, in the middle of the night. It's really all it is. Not that there's a ton of buying. It's just there's not a lot of selling. People don't realize this, but when a market runs out of supply, it appears to have strong buying. Having been the supplier for 25 years, when I stop selling, price goes right back up, which allows me to sell more at higher prices. Right? So if you're a short and you were short from 12 or 13 or even 10, 11, and it broke the 7s and came down and gets back up over 7.5 and it starts going sideways, right? When it starts going sideways like this, it means we're running out of supply and they're negotiating for supply. The sellers, of course, want to sell as high as they can. The buyers want to buy as cheap as they can. That's what chop is that little negotiation between size traders. No problem, Laura. We want trading to make sense to people, right? You're putting money at risk. You should know why you're putting the money at risk. There's a business reason for every trade. And if the tongue-tied. If the business reason is not clear, then there's no reason for us to take the trade, right? And this keeps us from FOMO and all this nonsense, right? Right. So this chop, I always say this chop is like when I'd go to the store with my dad, and he'd go, "How much is that?" And they'd go, "It's $500," and he'll go, "I'll give you 10." And I'm like, "Oh God, we're gonna be here for a while, right?" So that's what this chop is. Now, if a big buy order comes in and we run out of supply, it'll move up quickly like that. Or if a big sell order comes in, it'll do that. But this just tells us right now, this chop, that it's kind of slow. It just tells you the pace of business is a little slow. I haven't even looked. Did that little one trade with the micro. Let's see what the DOM looks like on the mini. That's not so bad. There's 20 aside. Oh. See, it's slow. This is little business was done. Now everybody stopped to have a coffee. Hey, Jerry, how are you? This is what gets a lot of traders who don't understand the business. They'll go long, they'll go short, they'll go long, they'll go short, and this is when you get chopped up, especially if the price action's a little faster. That sucks people into trading. Don't trade this. Right? That's what we do in our room is we teach people you only trade when the business matches the way you do business. So I have a business set up where I trade from the edges. The market looks below a level and comes back up over it. So I go long. I know where to put my stop. I know what to expect for a return. And of course, if that doesn't work, I get out of the trade. Right? Same with shorting. Right? But when it's doing this, this is what I call a pickpocket market. This is where, people complain about market makers picking you off, right? They're not really trying to pick you off. They're just doing business and you're getting in the middle of something that you don't understand. That's all it really is, right? In the 80s and the 90s, before electronic trading, yeah, market makers were way more predatory. And there were a lot more market makers. Now there's like 8. And they run so much volume that they don't have to be predatory. When Jane Street makes $16 billion dollars a year, trust me, it's not from hunting your stops on a micro, right? you know, they're making so much money from order flow that they don't need to hunt your stops. Back in the 90s, yeah, they had small independent market makers that would be, predatory short sellers, predatory stop hunters, right? But they're all out of business now. That's all different. Yeah, exactly, Nigel. Those single prints are full of buy orders. That's where the shorts were trapped from Thursday, and that's exactly where you can expect the buying. Hey, Mike, yeah, there's Virtue, Citadel, Jane Street, Bank of America, Susquehanna. Oh, I don't know. There's not many left. When I started trading, when I started in the business in 1993, there was something called the NASDAQ Red Book. And it was the size of a Bible, and it was the directory of all the market makers. It had the phone numbers to every single desk, right? Pre-internet. If you looked at that now, it'd be like a pamphlet. There were thousands of market makers back in the day. There's small independents all over the place. Just like on the floor in Chicago, they'd have the independent traders. Hey, it's starting to clean up. Here we go. Let's see if we have selling up here at 11. Sorry, 10 and 3/4. No trade yet. What I want to see is I want to see the reaction when it gets up, when London opens, and it gets up to this 11. I want to see if we can clean it up here and then do one of these, or if we have to flush it further. I don't mind going a little lower. The more selling we get, the better price action we end up getting later on. I know it sounds a bit weird, but it's true. Liquidation is like the WD-40 of the markets. It makes everything run smoother. No, market making is it's a huge business now, Mike. Did you see the building that Citadel's building in Miami? It's pretty impressive. Yeah, check it out. It's pretty fancy. It's not a shack. Okay, so we have sellers at 10 and a half, 10 and 3/4. Back down. It's not ready yet. Now, when London opens, let's see if London opens under this level, we'll have single prints to the downside, which is an excess of supply. You know, it's good even for traders who take trades that are not A plus setups. You know, say you had bought some here, right? Even if it was choppy and slow, and you got up here, you know that there's going to be sellers just under 11. So this does not come as a surprise, right? Because as a retail trader, a lot of them get surprised. Oh, what happened? What's going on? What's happened? Right? Well, there's sellers here. They were here before. They're going to be there again, right? So it's no big surprise when you get up there. Let's see if we could take out that overnight low. Next set of stops is 58.99. This is the D low from the 15th. Interesting. Look at the L low, right at the signals. Just let them trade this out. There's no reason to get involved in this chop. Wait for a direction, and it is the middle of the zone. Hey, Doc. No problem. That's a poor low. That should break. I'd be very surprised if this holds. Let's see. That's interesting. You know, I've never looked at the hourly candles. Very interesting. Overnight point of control is way up here, 1,500 contracts at 59.29. It's holding. I'm surprised. So we're looking for sellers at 9. All right, we have a little set of single prints. So this is a set of supply single prints right here. And that's just because of the time of night. If they fill, it means we ran out of supply. Yeah, I'm watching, Mike. I took one trade this morning. I took the look above and fail of 59.22.5 down to here, down to 19. And because it's Monday morning, I take it slow and kind of ease into it. So we filled that, so we did run out of supply. And the single print, the poor low held for now. Let's see. If you get to a place where you expect selling and the market walks right through it, it means the sellers on this flush down. See, there was the first flush, right? This is interesting. The market flushes, comes back and it goes sideways and finds that seller there. The second flush you notice is faster, right? It's because they've taken those people out down here and now they're going to sell into it again. So watch as the market rotates back down. Let's see if it can take out the sevens. Yeah, if you're trading here and you're getting stopped out, Mike, it's because you're trading in the middle. You want to be at the edge. You want this look below and fail. And because it's not happening now, people get impatient and they just start trading and trading and trading and trading in here, trying to capture the move back and forth. It's harder. It's easier. It's easier said than done. That's why I never trade in the middle. I only trade at the edge. I just leave this alone. And once you understand that that's just going to take your money, this is just there to take your money. The reason is most people don't understand the business that's going on there, and that business is none of your business. Well, that's cool, Jerry. Right? I just can't keep that like Jerry's asking about in the Nasdaq. We're at the VWAP from last Monday's news, and that's cool. You can anchor it all over the place there, but for me, the less stuff I have on a chart, the easier it is for me to trade. Right? See, for me, the risk of getting chopped up here, right, is not worth the risk of the money that I'm going to make. Right? When you have unpredictable order flow in a chop area, and where wholesale, Mike, you can clearly see, like you've been in the business, so you should understand this, right? You got a rotation here, right? You're watching inventory drop down into that box, right? That's liquidation into wholesale hands, right? Waiting for this. So you don't want to trade that unless you're a wholesaler, right? So if you don't do business at that time, you're less likely to get stopped out, right? Well, it's more just the sell orders get completed. Once the sell orders are done, the market's going to rotate higher. But people are sitting there, and this is the problem with retail trading. You don't get paid to sit and watch. That's the whole problem. If you got paid to sit and watch, you'd take way less trades that are bad, and you wouldn't have all these psychological problems that people talk about, right? But you don't get paid to sit and watch. When you work on a trade desk, you get a draw, they give you a salary, but nobody works for the salary. But that keeps you from doing dumbass things, right? That's why people in the business, yeah, but it gives you enough time, Mike, to understand the business. See, that's why they give you a draw. So you can pay your bills and not make stupid mistakes because you're desperate for money, right? Desperation creates more losses among traders, right? People call it FOMO. I don't call it FOMO. I call it desperation. A desperate trader is a dead trader, right? And because we don't get paid to watch, nobody watches, and that's why everybody who does watch takes all your money, right? Now let's see if we can take out this overnight low. When you watch something with no attachment to the outcome, you're going to be so much more open-minded. Like if you're long right now and it's doing this, you're like, oh, it's going to go higher. It's going to go higher. It's got to go higher. It's got to go higher, right? If you're in a trade and you're long, you're not looking at this objectively, right? You're tied to the emotion of financial loss. So you're not going to look at this objectively. See? So that's a proper low. It's got 2 ticks of excess. Nope, no poor low anymore. I really wanted to see this. I really wanted a look below and fail, but they won't. Haven't had that yet. What seems like a bad use of one's time? Learning and understanding how markets work? That seems like a bad use of one's time because you're not getting compensated for learning? Yeah, then go do something else. From a purely economic perspective, right? Here's the thing. If you can't sit and watch and learn and you think you should be compensated for learning, do people get compensated when they go to med school? No, they don't. But because this is about money and the business is about money as opposed to skill, people are completely wrong, right? And that's why they'll never be successful doing this, because their focus is on the money, not on the skill. They don't even think that it's a skill-based trade, right? They think it's just that they have a right to make money, which is insanely egotistical. I have no idea what I'm doing, but I deserve to make 10 grand a day trading. I mean, think about it. Sounds like an idiot, right? You know, but all of this stuff, zero sum game and all this stuff, Mike, it's a bunch of like hoo-ha, right? Do you want to learn the business or not? And if you don't, and if you think from an economics perspective that it's not worth it, then go get a job, right? Go do something else. Retail trading is not for you, right? And that why are they trying to get me? You're too emotional about it. You got to take a step back, brother, right? Hey, Info Risk, how you doing? These are things that people struggle with, right? They think they deserve to make money as a trader even though they have no skill. And then they get pissed off and they get all emotional about it, right? And I would go, that means it's not for you. And that's okay. This is not for everybody. This is a difficult thing. It's the most difficult job in finance because you have to develop skills by yourself. You have to develop risk management by yourself. Most people don't even know what risk management is. Monitoring an overnight trade, nice work, right? So they force it, they take bad trades. Yeah, there's nobody sitting next to you going, "What are you doing?" Right? That's a stupid thing to do. Yeah. Yeah, so if you have the attitude that sitting and watching is not for you, you're going to lose a lot of money by trading when you don't know what you're doing. You're just going to lose a lot of money, right? Because you don't have the intelligence to actually learn something. It's tough. It's tough. Yeah, Doc, you've put in the time. I remember you've been with me since the beginning when I opened the room. So I saw the frustration and you worked your way through that frustration. It's not easy. All right, if we take out that overnight low, we're looking for 3 3/4. Oh, this painful liquidation. It's like the most painful liquidation in a while. It just takes so long. Creeping. There we go. We'll go into the 4 times discount zone. We stay under 3 3/4. You can stay short till 5,900. That's where you should see some buy orders around 5,900. Hey, crypto, what's going on? Now, those of you who are looking for the look below and fail, remember that there is a whack of inventory here. So if you are thinking of going long at 4, there will be some selling in this area here. So just be aware of it. Yeah, I don't think the low's in just yet. I could be wrong. Seems to be a seller at 3 3/4, 4. I don't know what a fair value gap is. Sorry. I have a gap. Like a gap is when you open outside the previous day's range for me. And then these are single prints, which are a set of single letters between two distributions in market profile. Look at that. Remember, if you're long the 4s and the 5s to sell into the strength of this move, right? Yeah, that's just a market profile term, and we use that to help determine where the buying is, and which is handy when you're a seller and you're short. You short down into the find the bid, and then when you find the bid, you cover. Like right now, if you were short and it did a look below and fail of 3 3/4, you should do some covering, right? Okay, that's nice. That's good to see. So for the moment, we found the bid. Now let's see if it gets through the 9s. And then if it gets through the 9s, you're looking for sellers up here. And if it's a slow night or a slow morning, what you might, the next move might be to go sideways in this area and move that point of control down here to show decent accumulation, right? That would mean dropping these people down into this area, a good accumulation so you can do this later into RTH. That's one scenario. Of course, the other scenario is lower, and that would target 58.99, which is the D low. So single prints are an area where the stops got ran, and they'll be responsive buying or selling. My congratulations on winning the Eurovision contest. I don't even know what you're talking about, man. uh, it's pretty funny, though. I think you've got the wrong JJ. And if it creeps up past 10, you're looking for 11, 11 and a half. Oh, there's the seller at 10. Oh my goodness. Gonna need some more coffee. Got a little bit of Monday brain here. I don't know. I don't. Is that Eurovision? Is that singing contest? Does price retrace to a single print? Yes, it does. In mechanical quiet markets, they're usually very, very accurate. Yeah. Oh, it looks right about right, Doc. Looking for 11 and a quarter. And there we go. That was a nice rotation. That was a really nice rotation. That was a really nice look below and fail. And I was too short biased here to take it. So that tells me I'm not trusting the chart and my brain is not quite right. Discipline is not as good as it should be. So that way I can adjust. Right? When you miss obvious trades, you talk yourself out of obvious trades. Your discipline isn't there. You should have been long here, should have put the stop here. Right? But when you talk yourself out of it, you don't take the trade. That's just bad discipline. That's something I've found over the years. Hmm. That's a good observation, man. Stop running? It's not even worth talking about, John. When a stop gets run, just remember, John, the only thing that you want to watch is the response when a stop gets run. So if this was a stop and it got run, you'd want to see how much liquidation there is and how many buyers are sitting underneath there. Don't worry about algorithms and all that stuff. But you don't, the problem is don't worry about all that stuff. Worry about your trade setup, right? How do you learn to trust the chart and turn off the noise in your head? It's a discipline thing, Lonigan. It's a pure discipline thing. And what that tells me is that I should not be trading size, right? I got a little distracted talking, right? Mike was going on and on about, you know, certain things and I was talking with him and I was distracted and I wasn't paying attention to the order flow because he was BSing about all sorts of crap. I got sucked into it, right? It's not his fault, it's my fault for ignoring him. I should have ignored him and focused on the trading, right? And this is very easy to do. You get sucked into something else, right? Because it's easy to lose focus. So learn to trust the chart and turn off your noise in your head is all a direct matter of focus. You have to focus. If you cannot focus, right? No, I'm glad you did it, Mike, because it's a good example of what happens when you don't focus. See, I lost focus, and I totally, if I was an offensive lineman, that's a lookout block, right? That's a lookout block. That's where I miss the block, miss the linebacker and go, look out, right? That's clearly a lack of focus, right? And a lot of people are like, how do you turn off the noise in your head? You do those exercises that I've been talking about to focus. Follow your rules over an opinion, John. Yeah, if you were focused, you'd see this candle come up over three quarters four. You'd be buying 4.5, 5, selling some at 7, and then there's going to be sellers here. I'd be out the rest at 9, right? So very important. That's a really good lesson, right? It's very easy to lose focus. And as soon as you lose focus, they got you, right? You'll either miss opportunities or you'll be sloppy in the opportunities that you take or you chase, right? If we clear the 12s, look for 13, 13 and a half, just under that 59.14. So if you keep a trading journal, right, write things down like I got sucked into a conversation, missed an obvious trade, right? Lack of focus. So now you know what you have to do, right? You have to adjust. And this will help you when markets change and order flow changes, you'll be able to adjust. You have to train yourself how to focus. You have to train yourself how to snap out of bad habits. You have to train yourself how to adjust. It's all training, and you have to do it. Otherwise, this is an impossible business if you can't train yourself to focus and train yourself to adjust. It's a good thing that happened today. Thanks, Mike, for being a chatty Cathy. Right? And the other thing he does is he chats in two places. He chats in the Discord and he chats on YouTube. So you're like constantly banging back and forth, right? You're not watching the chart, right? You ever seen Rocky? Mike is like that chicken that Burgess Meredith makes Rocky chase, right? He's like the chicken running around, and Rocky has to chase him, right? And catch the chicken, right? Oh yeah, but he's from the business. He can take the abuse. Hey, this is nothing. They used to lock him in a closet. Go in there and code. Don't come back until you've got something. Here's some hot pockets, some donuts. We don't want to hear from you until you've written the algorithm. Yeah, get out of here. You're not allowed on the desk. Exactly. All right, folks. Have a good morning. Right, trade smart. Don't be patient. Be smart. And we'll see you at 9 a.m. for the RTH session. Let's see if we can move this point of control lower. Come visit us at the Trading Syndicate. And and have a wonderful, wonderful morning. Bye for now.